20, a 16% growth. Similarly, cardio business has gone to around 94 crores as against 87 crore last year. Other segments like CNS, derma, ophthalm, gastro are all now turned positive, positive growth during the quarter, Q3 quarter. The reduced traveling costs and marketing costs has helped in margin expansion. API business has continued to record an overall 23% business growth. Institutional business has recorded a significant business during the quarter of almost around 138 crore as against 47 crore in same quarter last financial year. Out of which around 34 crores in one-time exceptional business has been done. Institutional business for the first 9 months of the current financial year has been around 309 crore as against 136 crore in last financial year. It has exceeded, in fact, our own the annual projection for the whole of the financial year. These upsides to some extent was offset by the MEIS benefits are now not available, and annual we used to get around 12 crore of MEIS benefit per quarter, so that income is not there right now, and RODEP rates are still to be announced. Your higher material costs on certain key intermediates and availability disturbances has also some impact during the quarter. The higher cost of freight, almost by around 40-45%, that has gone up, is also impacting the overall the margin. Overall EBITDA, in spite of all that, has been recorded around 26.98% as against 24.46% in last financial year, a increase of almost around Q3 last year, around 2.5%. Having given the broad presentation for the quarter, now I open the floor for question answer.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sion Mukherjee from Nomura. Please go ahead.
Yeah, thank you. Sir, just your comments on the margins, particularly the raw material price and freight prices going up. I mean, can you comment, sir, the outlook on this? Is it something which has happened through the quarter and, we will have even higher impact in 4Q going forward? Any color if you can give how the trend is evolving with respect to these costs?
It's a temporary phase because of certain disturbances, also because during these times happens in China, largely on intermediate side, because of pollution factors and others. So there are certain availability, like say, I would say the example like paracetamol prices used to be 350 rupees a kilo earlier. It has gone to almost around 550 to 600 rupees a kilo. So because of certain intermediates are not being available from China. Certain key intermediates also we had to get from air because there was certain kind of supply disturbance. So additional freights are paid. So these are the things which are there, but it's a very temporary kind of thing. Maybe going forward, maybe on FY again, your quarter one things will be normalized. Yeah.
Okay, that's helpful. And so the second question, if you can give some color on the API business. I mean, this year has been very strong. And I mean, is there any component that you can call out which has driven the numbers, and how should we generally think about it for next year and Q4?
The API business during the overall 9 months has been very, very strong, and largely it has also helped by your hydroxychloroquine and certain chloroquine related business of COVID. So that exceptions was also there during this period. And overall, if company as a whole, I think in first quarter we did almost around exceptional business of around 260 crore or so. And some business of that nature continued, but that may be broadly maybe or up to now maybe around exceptional business maybe around 350 crore, which I am taking put together, not API. It's all formulations and API and everything put together, domestic tender and everything put together. So that has been the exceptional business. But otherwise, let's say higher capacity utilizations and overall the business penetration has been good for us, and also our sartan business has done very well and will continue to do well. So that will certainly help overall in API business in time.
It is, these exceptional business, I know like Q1 was very strong, but just for this quarter, you mentioned about the institution business where you have a 34 crore income there. Any other such which you think is exceptional or rather, COVID related, which is there in this quarter in any of the segments?
Nothing else other than that 34 crore is exceptional business. That's a one-time business.
And just one more thing, if I can, so the sartans, it's still holding on. I mean, how has it trended through the quarters, and how are we now in sartans of a pricing volume, if you can throw some light, and how large it is in our overall scheme of things in API, sir?
Let's say one of the key intermediates which is used in all sartans as a starting material, their price used to be almost double, and that has come down to half the level. And that is also resulting in overall reduction in the sartan prices in the market, because whatever cost reduction is received by companies, that is being passed on to the consumers, to the customers. So that trend is there. So overall price trend is down because of significant reduction in the raw material cost. So that's the overall trend in sartan.
Okay, but now you would say it is stable, sir? This intermediate prices are now stable?
Yeah, now intermediate prices are stable, yeah.
Okay. Thank you, sir. Thanks. I'll join back.
Thank you. The next question is from the line of Kanchan Tarai from HSBC. Please go ahead.
Hello. Hi, this is Damayanti. Thank you for the opportunity. Sir, my question is on the export formulation business. So on the generic side, we continue to see good momentum. So can you update us on recovery on the UK business? And on the branded promotional market, why we are seeing a bit softer trends?
Overall, let's say EU, including UK, has given a very good business in the quarter. I think as against 76 crore in last financial year Q3, we had done around 113 crore. So almost around 49% of growth. Our other market like Australia, New Zealand has also grown by 13%. Canada has grown by 37%. So there is some reduction in the business on account of South Africa. Last year there was some kind of tender award and all that was there. They have yet to decide in this year. So that business is little lower from 43 crores last year to around 16-17 crores. So there is some reduction. So overall generic business has grown by around 14% for the quarter. And put together with institutions, it's almost around 49% growth for the quarter. As far as your branded promotional businesses are concerned, let's say your CIS market, more particularly Russia, was impacted by COVID. And you'll recall that in first quarter we had a significant amount of shipment which was to go in March, and subsequently they went. Thereafter, because of the COVID, offtake in that market with distributor was less because of COVID. So in second quarter, shipment significantly reduced in CIS, and we further reduced the shipment in this quarter. As I think Q3 last year was almost around 52 crore of shipment. This year in Q3 we have done a very minimum shipment of almost around 16 crore. So that has impacted is all because of COVID, and we have adjusted the inventories in that market. Q4 is likely to be normal, and overall branded promotional business for whole of the year will show around 10% kind of growth overall. Let's say business in Middle East Africa, your West Africa, all that are doing very well. I think West Africa is growing by 23%. Your Middle East Africa is almost going by around 46%. Asia is more or less at the same level, at last year's level. And Latin America is more or less, there are 5-6% decline is there. That's likely to get covered up in the fourth quarter of the current year. So that it's only the CIS where the COVID impact was very high. That is in first 6 months of the current financial year, even though shipments were there, but actual sale on ground was low, and that inventory adjustment has happened in Q3.
So CIS should normalize from first quarter of next fiscal onwards, right? Broadly.
Business growth now is very good. Overall, it has started returning to normalcy, but whatever shipments were made in the which were planned in the month of March, they were because of lockdown, all that happened in first quarter. So that time shipment was very high, almost around 70 crore shipment went there to CIS. And that those inventory remained in the system, and because of COVID, and in this quarter we have completely controlled the overall inventory in that market.
Okay, that's helpful. Sir, follow up on the generic part. So you mentioned pickup has been good across markets. So I was specifically asking how has been pickup on the UK market, because I think last quarter we had some pullback on the receivable side, right?
That is normalized, and we did almost around 60 crore business in UK as against 21-22 crore in last financial year in Q3. Yeah.
Okay. So my second question is, can you provide us update on some of the key capex projects, say Aurangabad, Dewas? So how are things moving up on the capex front?
On capex side, the major one with your one API plant we are further constructing at Ratlam, and that project is going very well. There are some delays because of again COVID, because of your civil construction part. All machines are all landed at the plant, and probably in the month of March we will start overall commissioning work, and by May or so the plant will be completely ready for your validations and all. So maybe from second quarter of the year we will start the commercial production from that plant. So that's the one, and I think overall that investment may be around 100 crore there at Ratlam. As far as the Dewas plant is concerned, we have already started the civil work for 2 plants there, and that's going full swing, and I think hopefully by September, October the entire installation should be over, and by maybe on fourth quarter of the next financial year the plant should be ready for production. So these are the 2 projects currently happening. In addition to that, we have done some kind of one automated plant for producing some intermediates has been set up at Aurangabad. That plant is fully commissioned, and because of COVID, a lot of installation and deliveries of equipment got delayed, and now they were to happen in maybe around the second quarter of the year, but significantly delays has happened. And now that plant is commissioned and working well now, and we will looking at maybe at I think 1 more month's result, we will further set up another plant there for maybe around 50 tons or so to scale up further production of that particular intermediate in next financial year.
Okay. And so budget for next quarter, earlier we indicated 300 to 350 crore. That broadly stays, or you have planned to increase?
Broadly, the capex is going to remain in that range only.
Okay, sir. That's helpful. I'll get back in the queue. Thank you for your response.
Thank you. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is with relation to the India business. So any color you would like to provide that about the growth outlook for FY22, and how do we see this promotional cost panning out in the next 6 to 8 months, or whether it would be scaled up to the previous level, or there might be some cost savings which would be possible considering we would be moving a little bit on the digital end front as well.
Well, ladies and gentlemen, we've just lost the line for the management, requesting you all to please stay online while we reconnect the management back to the call. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the management reconnected. So the question is from the line of Mr. Abdul Puranwala. You may please go ahead.
So shall I repeat my question?
Oh, no, I didn't hear you.
Yeah. So, sir, my question was with regards to the India business. First of all, I would like to know what would be the growth outlook for FY22. And the second part of the question was in relation to the promotional cost, for which, as you mentioned in your opening remarks, there was some benefit seen in the quarter as well. So going ahead, how do we see this cost rising up? Would it be back to the pre-COVID levels, or there might be some cost savings which would be possible?
Okay. As things are normalizing in India, and if the second wave of COVID doesn't happen, I think we should record almost around 13 to 14% kind of growth in domestic market in next financial year. And the business will then be absolutely normalized. As far as cost is concerned, there will be some amount of savings will continue on account of whatever this continuous medical educations and conferences part is concerned. A lot of those the activities will continue to be on electronic mode, and it's also the medical professions and companies are realizing the benefit of that. The travel takes a lot of time, and that with these kind of conferences, the professionals also save their time because they can participate sitting from their clinics or home or whatever it is. So those kind of costs will have a significant reduction, but all other costs may start to get normalized in the next financial year. The travel cost, both international and domestic, in this year was hardly any. I think overall we must have saved almost around 25 crore on account of those kind of travels. So I think once things get normalized, there is no substitute for travel because but it may not happen to that an extent. Some cost reduction compared to say FY20 will continue to be there, but the cost definitely will move up.
Sure, sir. And so my second question is with regards to the API business, and this is a follow-up from the previous participant as well. So I mean, if I have to understand on the current plant capacity, then what would be the current capacity at what we are operating, and would that be sufficient enough to drive the 12-13% growth what have been guiding in the last con call as well? So would that still be achievable in FY22?
Let's say, excluding the exceptional business what we have done, that kind of growth is possible. Absolutely, there are no reason that why it should not be there. So we are confident to have that kind of growth. But the certain exceptional business what we have done, those business may not be there in next financial year. So overall growth numbers will depend on that, and that numbers whatever is there we will give after the fourth quarter that how things will pan out. But overall API business will have that kind of growth. As far as capacities are concerned, we are continuously debottlenecking and creating capacities within the existing infrastructure, and also now have started setting up the new plant. So at Atlam, one plant is under setting up right now, construction and all, and 2 plants at Devas. So hopefully next year the additional capacity will also be there. So that will drive the overall future growth in coming years.
So that would be all from me. Thank you for answering my question.
Thank you. The next question is from the line of Kunal from MK Global. Please go ahead.
Thank you for taking my question. So the first question is on the one-off businesses that we have done in this year till now. So we have said it's 350 crore. So if I recollect it, I think 40 crore was the SCQ business that we did with the government. 26 crore was the shipment that was delayed in the branded ROW market that we did in Q1, and then another 34 crore we have done this quarter for the institutional business. So all put together is somewhere around 100 crore. So is it safe to assume that the rest 250 crore additional business that we have done, which is one-off, is into API business?
It's not API, it's also formulation businesses are there in international, like your more relating to SCQS use which were there in the COVID and also chloroquine used in COVID in initial period. So those businesses were both API were there and also formulation businesses are also there of that. And mostly those we are given, I think, in first quarter almost around 260 crore number. That was the exceptional business. And in that, we are not taking in this CIS business is exceptional because those shipments were just shifted here and there. That's a normal business, normal kind of thing. It's only the business only relating to chloroquine and hydroxychloroquine, whatever we have done. Additional business on account of COVID. That is the number which I have given. That up to now, it's almost around 350 crore.
Okay. So
that
now that
not only of API, it's also there of formulation. It's also there of domestic tender and all that. Yeah. So it's the formulations in generics, formulations sales everywhere. So that's the overall additional business.
Yeah, but now that we are seeing that the API within that also the certain prices have kind of deflated significantly. So just want to understand what would be our growth profile for API business next year.
Overall, our budgets are under preparations right now, and we are working on that. So in the fourth quarter, when we present our results around that time, we will give the complete projections for the next financial year of all businesses.
Okay. And secondly, on the tax front, so how much max credit do we have left, and what is the runway there for us, to go, and when will our tax rate might be resetting to a normalized level?
I think we have around as of now around 360 crore is the MAT credit available. Out of which I think in current financial year we'll be using around 100 crore. And next year some benefit on account of this Sikkim plant will go away. So next year we may be utilizing almost around 160, 170 crore, 160 crore or so. Broad calculations are there. So thereafter there will be hardly any MAT credit left, maybe around 40, 50 crore. So at that point of time we have to decide whether we are opting for 25% rate of tax. So the tax rate which is currently say 17.5%, 18%, that will go to around 25%. So still there is a 1 year, and depending on what kind of MAT credit is left out, we will decide which is what could be beneficial in FY24.
Okay. And the last question is on I think I missed some of your starting comments on the gross margin. But can you just quantify what would be the impact of MEIS and then the mix shift towards the institutional business, because we have seen exceptional business there, and is there any pressure in our core business so what would be the sustainable gross margin level that we should kind of look forward to?
I think overall gross margin levels, material cost ratio will be almost around 31% or so practically in the next financial year also.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Chirag Patel from Athena Shares. Please go ahead. Mr. Chirag Patel, you may please go ahead with your question, sir. As there's no response from the current participant, we proceed to the next question from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you for the opportunity, sir. So for the branded export market, I think if I heard correctly, you said 10% growth. Did you say that for the full year FY21 we will have 10% growth?
Yeah.
So then Q4 would be quite a good growth, right? Because there's a low base and year-to-date growth has not been there. So is that a correct understanding? Are you seeing that in your Jan shipments?
Yes, Q4 would be a good growth.
So almost like 120 crore or something like that is what I should expect, right? That would be like.
Q4 will be good growth. Yeah.
Okay. So for the Q4 domestic business also, if you can give some guidance. I think last quarter con call you had mentioned that we might see low teens growth. I think so is that possible in Q4 of FY21?
I think overall, like this quarter, we have achieved around 8% kind of growth, and some of the businesses have now started showing growth. And others also, the businesses what we talk about, the cough and cold, then your the anti-malarials and antibacterials, and more particularly pedia segment, there the decline has reduced in Q3. So Q4, these businesses will further be better. So overall, we see that from 8% overall, the growth can be around 8 to 10% in fourth quarter, and next financial year it could be around 13 to 14% kind of growth.
Okay. Just to confirm the capex numbers, so API Ratlam capex is 100 crores, which will commission in Q2, and Devas was a 300 crore capex, which you said will commission in Q4 of FY22.
Yeah, but some of the expenditure will be done this year. Civil constructions and all are going on. Yeah.
Right. Just so API Ratlam was supposed to add 10% capacity, and Devas is supposed to add 20-25% capacity. Is that correct, sir?
Devas will add certain, that's the kind of capacity Devas will add, yeah.
Okay, sir. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thank you for this opportunity, sir. Just on the export front, I wanted to check whether in the month of December we have seen many companies facing trade challenges while exporting. So even you have seen any impact of that for your trade? That is one. And regards to export growth for the following year or next year, having seen the strong base of the current year, what trend that one should really look at? So do you see that the integration benefits should start playing in the next year, and hence even after the high base of the current year, the growth momentum would remain strong?
Integrations are concerned, we are currently also maybe around 62% of our entire formulation is backed up by our own API. That's the broad number for 9 months. 62% of our formulations are backed up by our own API. So it's a significant amount of integration is already there in the system currently. And that's why, in spite of our having a lot of those kind of me-too products, old expired products, as a generic, we still have a good margin in the business. And this kind of would continue. Right now, what we are talking in terms of is broadly, let's say, journey henceforth is going to be, bigger journey will also happen on the intermediate side. And intermediate side, right now, there is only one small plant on piloting on 10-ton basis, 10-ton plant we have put up at Aurangabad. That is commissioned already and showing a good results now. Based on whatever learnings what we have, we will be setting up another plant in next financial year of around 50 tons or so. And thereafter, the major expansion on intermediate side would happen at our Nagpur facility, for which now we have initiated the environmental clearance right now. So nothing much will happen in next financial year, because environmental clearance and pollution boards clearances and all will take around 6, 7, 8 months from now. And then some work will start on ground. So maybe a very small amount of capex may happen in next financial year. Major will happen a year thereafter to set up those. And there the maybe probably larger integration from intermediates to API side will further happen.
Okay. And did you get any impact of the trade challenges during the month of December?
No, we didn't face those kind of challenges.
Okay. And interestingly, sir, you have mentioned about your level of integration. which is now 62%. If I remember, in the last quarter, fourth quarter, you had mentioned that your level of integration was 55%. So that means despite all these challenges, you have progressed on the integration front. So for instance, your formulation business is concerned. Is that correct, sir?
Yeah.
And so that is really good. And more on this, if you can share what portion of your business, formulation business, would be integrated to the level of a KSM, sir?
That number is not ready, but a lot of the KSMs we produce ourselves here. Of our key API, a lot of intermediates we are producing ourselves here.
Okay. Or else, in a different way, what is the share of the intermediate as of now for the captive consumption only that we will be using as of now, or in the current, let's say, in the current financial year? And what is likely that you are anticipating post this Chem-Explo, that Nagpur plant, when you plan to commercialize? What is the kind of progression that you are anticipating for your intermediate?
We don't sell KSM, so KSM sell numbers are not there. And by and large, the KSM for our main products, major products we produce ourselves. Maybe 7-8 APIs, KSMs are, some of the KSMs are produced internally by us. And that's the journey, the further journey is being taken up. So initially, we are able to give you the number on that, yeah.
Okay. So then is it fair to believe that, as you mentioned, top 6 to 7 or 7-8 products are, for 7-8 products you are manufacturing KSM yourselves. So can we believe that those top 7-8 products are fully integrated starting from the KSM as of now?
Not necessary that every intermediate is produced. Some out of that may be imported also. India itself. Not every intermediates are, like say sartans are produced from OTBN. We don't produce OTBN. But we are working on OTBN. So at one point of time, once the very automated good processes are ready, I think we have certain encouraging kind of results are from R&D. So something will work out, but I can't say that definitely when that would happen.
Okay. And
the time we formalize our projects and plan and R&D and all those kind of gaps, whatever are there currently, they are closed to.
Okay. And
Mr. Patra, I'm so sorry to interrupt, but may I please request you to rejoin the question queue for your follow-up, as we have many people waiting for their turn. Thank you.
Sure.
Before we take the next question, a reminder to the participants, please limit your question to 2 per participants only. The next question is from the line of Rashmi Sancheti from InCred Research. Please go ahead.
Yeah, thanks for the opportunity. So just on institutional business, if you can share that this exceptional income is related to which products and which tenders. At the same time, exceptional business, currently, which are the products, on injectables and the tablet side, which we are supplying, and which tenders?
By and large, let's say this is an anti-malarial business, broadly anti-malarial business, what we are doing. And that's basically your artemether lumefantrine is in the 2 forms are there. One is your conventional dosage and also in the dispersible formulation. And then we do artesunate and amodiaquine as another product, which is also a large product. And third is artesunate injectable. These are the 3 main products currently are there right now. There are 2-3 products more are there, which are there in your R&D pipelines, and some of the bios are cleared, and then filings would happen in next year. So that will also add to the overall to the basket, which is not currently in the production. So that will add. So these are the 3 products which are there on anti-malarial and major businesses. I would say that almost around 95% of institutional businesses are happening on these 3 products.
Okay. And sir,
by and large, this business is of 3 types. One is your global fund related business. Another is related to U.S. donations to the developing world, mainly Africa and other countries. And third is relating to country tenders. And normally we don't give bifurcations that there are businesses that we are doing. But yes, we have country tenders also. We have businesses relating to Global Fund, and we also have business relating to US donations to the other African markets. So all the three put together, the businesses are there. Only out of the total businesses of almost around 309 crore what we have done in the current financial year, only 34 crore of business, which is not out of these three products, but again of anti-malarial product, is done in this quarter, and that is high exceptional business, one-time business, and that's why I say that is a purely exceptional business, nothing to do with these three products. It was the fourth product, one-time business of 34 crore we have done.
Okay, sir. And sir, on your subsidiary sales business, this quarter, after two muted quarters, we have given a strong growth. So which subsidiary is leading that growth, and what is happening on the bottom line of all the subsidiaries, if you can give a little picture on it?
Let's say subsidy-wise, we have major one is in UK, Onyx Pharmaceutical, Onyx Onyx Scientific, that's continuously doing very well. That's generating almost around over 30% kind of EBITDA on overall business, and I think they have contributed, post-tax of almost around 17-18 crore of overall profit in the current year. Then we have acquired a front end in US called Bayshore, and that is by and large because we are not there currently in US, so our formulations are not getting sold. It's basically they do some kind of trading of some tie-up with third parties, and their products are being sold. And this quarter the profit has been very good, almost around 9-10 crore of profit they have shown. Overall for first 9 months there is a 6 crore of profit. There was some loss was there earlier. So overall that they have done well. Apart from that, we have another subsidiary called the Pisgah, and that's for your overall for API side, and that subsidiary has given the losses, and because of the continuing FDA issues and all, we are not able to commercialize those API and then continue with that. So once the integration fully happens, I think that subsidy. So we expect that this maybe current year and next financial year they may continue to incur the losses, but thereafter it should start making money. So these are the major three subsidies which are there. As far other than that is we have your associate company called Tropic Wellness. That's marketing the nutraceuticals in India, and we have around 20% shareholding in that company, and that company is doing very well. They are generating almost around this year they will generate almost around 100 crore kind of business, and overall profit after tax of almost around 20 crore. So and doing very well at the marketplace, and business is also growing very good. And apart from that, we have Krebs as another associate where some kind of fermentations and some synthetic products are there. That company currently is in losses, but hopefully we should turn it around in the next financial year.
Okay, sir. Thank you. That's it from my side, and wish you all the best.
Thank you. Reminder to the participants again, please limit your question to 2 per participant only. The next question is from the line of Rahul Sharma from Karvi Capital. Please go ahead.
I just wanted clarity on any update on the US FDA inspection of our plants, sir.
Let's say we are in touch with them. Whatever required by them is being supplied, and I think because of COVID they are not able to do the reinspection. As things get normalized, inspections would happen. Beyond that, we can't say because when and how long it will take is difficult to answer.
So another thing, could you share the numbers of branded and generics region-wise, sir, for 3 months and 9 months?
Overall, I think On Q3, we had done around 77.5 crores of promotional business as against 112.98 crores last year. Out of which I think CIS business was around 15.85 crores. Your Southeast Asia was almost 15 crores. Middle East Africa was 12.5 crores. Then Latin America was 10.3 crores. West Africa was almost around 24 crores. So that's the broad breakup is there of that. And in generic business, EU we had done around 113 crore as against 75 crore in last year. Australia, New Zealand is 52 crores as against 46 crore last year. And Canada we had done almost around 36 crore as against 26 crore in last financial year. South Africa business around 16.5 crores as against 43 crore in last financial year in the Q3. So that's the Q3 breakup overall is there. Yeah.
So how much I did for Southeast Asia? I missed that number in promotional markets.
Southeast Asia is around 15 crores. Last year was also 15 crores. So more or less same number.
Okay, and 10.3 crores was Middle East, sir?
Latin America. Latin America is 10.3 and last year was also close to 10. So maybe around 3% growth is there.
Okay, sir. Sir, are you seeing some recovery in the CIS space now, sir?
Yeah, business is good currently. The COVID situation is in control there, and business has again started reviving there. And in order to control inventory, we have not done much of shipment in Q3. I think Q4 shipments are going to be normal because since we are not, the average business is almost around 167 crore last year we did. And so 2 months practically the inventories are controlled there, and hopefully the fourth quarter will be normal, again a normal quarter.
Mr. Sharma, I'm so sorry to interrupt. May I please request you to rejoin the question queue for your follow-up?
Thank you. Thank you.
Thank you. The next question is from the line of Krati Rati from Perpetuity Investment. Please go ahead.
Hi, thanks for taking my question. Can you share what is the net cash number as of December quarter?
I think overall, cash holding as of now is almost around 850 crores 850 crores.
Okay. And my second question is that in our domestic business, Zerodol brand, which includes Zerodol T, SP, is a pretty significant size. So how was the growth in FY21 and how are we seeing that brand in the next 2-3 years?
Actually, we don't give brand-wise number. I have broadly given you the number of pain management that we have done almost around 266 crore of pain management business as against 229 crore. So in Q3 we had grown by almost around 16% on pain management. So pain management continue to do well, and hopefully next year also it will continue to have almost around 20% kind of growth in pain. Pain will continue to be significantly driving the overall.
Okay, thanks for answering my questions.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you. Good morning, everyone. Most of my questions are answered, just a couple of them. So one is, what's the margins outlook for next 2 to 5 quarters as we go forward?
So current year we've done a lot of exceptional business, so margin levels are high. But overall we see 25 to 26% kind of EBITDA margins are maintainable kind of thing next year also.
Okay. And second is on this China Plus One strategy, or other trend. So are you seeing this on the ground, or this is a bit more in terms of sentiments, etc., but not on the ground? And second to that is, do you expect Chinese companies to fight back at some point in time, drop prices? So some real anecdotes or some insights from you would be great.
I think that's happening at marketplace. People are definitely looking at to broaden their overall supply chain, to add some kind of more so that their business doesn't get disturbed. But currently we are not there in US, and therefore that advantage to us has not come to a great extent. In Europe, anyway, we were doing business. Part of our business is distributed across geographies, except zero business in US. So it's basically Latin. We have business. We have business in Africa. We have started doing good business in China of API, and Chinese business of ours will have practically significant growth in next 2-3 years. Current year, I think we did almost up to Q3 around 25 crores. It may become almost around 100 crore in next 2 years or so. So that's the kind of prospect also there in China. So overall, it's a broad business we have in your China plus one. That's not happening in, let's say, in your Africa, or that's not happening in CIS. That's not happening to that extent in Latin, but it's more happening in Europe and America. Whereas America, we are not right now. We have no business, so we have not got that kind of advantage of that. But yes, for industry, that's happening.
Okay, great. Thank you very much, sir.
Thank you. The next question is from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Thank you, sir. What was the MEIS reduction this quarter?
Overall, around 12 crore last year we got, and on increase higher business, which it could have been more, but and from second quarter itself, because government is not disbursing the MEIS in current year till now, they have not started, even though it was there for up to certain period. But so we have not made provision in books. We will make whatever MEIS which will actually receive, that will be provided, because a lot of uncertainties are there. They are yet not open. The DGFT has yet not opened their window to file the application.
So in this Q3, there is no MEIS income recorded, and in Q2 of this year, there was 12 crores. Is that correct?
Also, we are not provided for in books.
Okay, Q2 also there was nothing. Okay.
But this quarter impact is almost around 12 crore.
What is the base quarter last year?
Yeah, compared to this. Last year, it was almost around 12 crore.
Okay. So then, actually in the market,
we will get certain MEIS once the government opens, because Q2 also there are some MEIS due. But that will, as and when it will come, we will recognize as income. Because right now they have not even opened the window.
Okay. So sir, just to understand the reduction in gross margin sequentially from Q2 of FY21 to Q3, so one is the mix, which is the higher tender business. The other is, you said, some higher raw material and KSM prices, but it is not to do with MEIS. It is those two effects, right?
Also, MEIS was also there as a part, because 12 crore is not there. But let's say we were holding certain intermediates of sartans at a higher prices, because prices has come down, whereas the market prices are corrected. So those higher rate inputs are consumed in this quarter. So that's why the overall margin levels are low. Plus certain products like, say, normal product like paracetamol, so from 350 level, it has almost gone to around 600, 550 to 600 level. That's the pricing currently prevailing. Certain intermediates, because of, again, winters in China, certain disturbances are there, because certain chlorination compounds and all, they produce less in this and more go for the pesticide industry rather than for your intermediates for pharma. So because there may be, so those disturbances are there, and maybe let's say you have to get those intermediates by air and additional cost and all that. So those are the some disturbances are there at market. Even paracetamol disturbances also because of China, because certain PNCB production is disturbed, and but it's a quarter's impact. It's not by first quarter of the, even in the end Q4 also it will start getting normal.
So on that PLI scheme, which was also related to that paracetamol intermediate, have you? I think you had applied for some. I don't know whether you applied for that or not. Can you just give an update on the PLI scheme? If you applied for anything?
We have made 2 applications for sartans only, and for which for one they've asked your plant is already under construction, and one we have applied for our Gujarat plant, Ranu plant. So there are 2 applications made, and they are only for sartans. We have not made any application for para or others, so that's not our line of business.
Understood. So sir, when you are saying raw material cost would be 31%, so gross margin guidance of 69, so that is much higher. So that is based on the backward integration and that you're doing. I mean, what is the confidence on that gross margin guidance?
Basically, what will happen that your domestic business where we have higher margins, branded business where we have higher margins, those all business will start becoming normalized in the next year. We get some sort of higher margins, and whereas some cost will also move up. So taking everything into account, it's a broad number, and I think our budgeting exercise is currently going on. So maybe fourth quarter we will give you the exact guidelines for everything, in terms of growth outlook, in terms of margins and everything.
Okay, sir. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for the follow-up, sir. I just wanted to have a sense on the novel exclusive side.
Surya, you are not audible, Surya.
Okay. Is it audible, sir?
Yeah, now it is better. Yeah.
Sir, about the novel exclusive, the capacity additions, what we are planning. So whether it would be a kind of a phase by phase, multiple unit kind of construction that we will be.
Mr. Jain has already explained this land parcel what we got because of this NCLT order, we will be using for manufacturing intermediates. Correct?
Correct.
So currently, our environmental applications are in the stage of being processed. It will take certain time. So any investment in this facility will happen in the later half of the next financial year.
Okay.
So it is only for, we will be initially using that land parcel only for manufacturing intermediates.
Yeah.
Subject to necessary environmental clearances. Yeah.
Okay. That would be multiple unit kind of a setup, or it would be.
Yeah. Every APA intermediate facility, it will be all multiple unit type.
Okay, fine.
For example, in Ratlam, we have about 25 plus APA manufacturing blocks. We call it manufacturing blocks.
Okay, fine. My second question was, sir, can you provide some update on the PLI thing?
Mr. Jain has already said we have made application for 2 products. So far, there is no outcome of that. Maybe by end of this month, something will come.
Okay.
Yeah.
Thank you, sir. Thanks.
Yeah, thank you, Surya.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Over to you all.
Thank you all for participating, and I think with overall COVID situation being in control, things on domestic and branded markets will again start reviving, and hopefully I think as COVID situation get normalized, our inspection should happen, and that will further open up our future years business. Thank you.